What's going on, traders? Today's day number 6 of the $1,000 account challenge, and today we are up $14 in the account. I took one single trade. This brings our total portfolio balance to $1,034.61. Straight off of my day trade watch list, we had AMD on watch for a potential breakout of this range going into today. We love this setup. The stock has been super beaten up on the daily time frame. We knew that this had a chance to give us a possible reversal and relief rally from the selling pressure. And then going into this morning, 5-minute time frame, what we see is the stock actually gapped up this morning above the resistance at 102, validating it as a point of support. So what we look for today is going to be a break of your pre-market high at $103 to take the trade and confirm that it's moving topside. Now, what makes this trade really difficult for us is that the stock opens and runs really nicely within the first 5 minutes. And part of my rules is not trade in the first 5 minutes. Don't chase the move. Wait for the dip entries. So what I like to do when stocks run like this is use a Fibonacci retracement tool, where I pull a line using the Fib retracement tool from the start of the move all the way up to the top point of the move. What this will do is give me my potential pullback zone. You have a 23.6 retracement area, 50% retracement area, and a 61.8% retracement area. In most cases, you will want to be looking for a dip entry down to the 50% retracement area. And when you do that, you can use the 61.8% retracement as a stop loss. This was my plan for a dip entry on AMD today, but given that the stock has had so much momentum, it gapped up this morning, it opened up and ran with no pullback, and the fact that it's been beaten up on the daily, I did not want to miss this move. So I made a plan to be able to take this trade, but still at the same time, mitigate my risk. So here's that plan. I was going to take a dip entry. I did take a dip entry under the 23.6 retracement line. And my intention was to scale in or average into this trade if we got a pullback to the 50% retracement line. By doing this, I'm able to get in the position so that if the stock continues to run, I don't miss the trade, but at the same time, afford myself the ability to manage my risk by scaling in the trade, thus lowering my cost basis if the trade did indeed dip further. And wouldn't you know it, right after I take the dip entry, the stock holds that whole area as a point of support. So I never did get to add to my position. There was one dip down right here that was pretty close to my add point, but it wasn't quite where I wanted to get my addition. I wanted my add closer down here to 104. So I stayed patient and held through the consolidation. I was looking for the high of daybreak. I did not close it on this dip because, again, my plan was to scale in. So by creating the plan to scale in, it allows me to hold through this dip because I understand that this could potentially move against me and I would add more position size to it. But like I said, the support holds. I never get the ability to add. And when we get the break into the high of day, I went ahead and made the decision to take my profits. What we know to be true is that high of day is always a likely point of resistance. You get a high of day rejection there. You get a high of day rejection there. You get another high of day rejection there. And we get yet another high of day rejection there. And so my fear was by continuing to hold on to this position through consolidation, theta was going to burn the premium of my contracts. And essentially I was just going to be stuck in chop, unable to take profit. So I did make the decision to take the profit as soon as we got the high of day break on this candle right here, for about a 12% gain. Now, the stock does continue to run a little higher than my exit point, but it is still really choppy up here, and I don't know that had I held through, I would have made much more profit before this reverses and comes back down. So the big lesson that you might take away from this trade is, yes, it's a runner, and yes, I am still looking to buy the dip, but how do I buy the dip early and not miss the trade should it continue to go, while at the same time still managing my risk? The answer to that is you plan a scaled in trade where you take a half size position on the initial entry and then you look to add to that position should it dip lower. By doing this, you go ahead and put size on the trade so that in the event that it continues up, at least you're able to profit. But in the event that it comes down, you're managing your risk, you're lowering your cost basis with the average, and you're still well above the cut point, which would have been down here around 103. Now, I will admit with my position sizing, had I gotten the add on this trade, I would have been a little over leveraged, but this was a really quality setup. To me, I deem AMD as an A+ setup today, just given the fact that it was range trading for so long. It's been so beaten up on the daily. It's been due for a reversal. We got the gap up this morning and the opening run. That's a lot of conviction in this trade. And so it was something that I was willing to size up on should I be afforded the opportunity to do so. So that's it. Just a one and done trade today, $14 on the day. And a green day in the books is always a good day, no matter how much the amount is. That's all that I have for you on this trade. By the way, if you would like to participate in the $1,000 account challenge, it is not too late to do so. The link to join is going to be in the description of this video. Thank you so much for your time and watching the video. I hope that it helped you out, and I will see you tomorrow when we continue the $1,000 account challenge. Cheers.